Hello, everyone, and welcome back to another episode. I'm your host, a millennial investor. In today's episode, we are going to go over a company that I've been very interested in. I've hated the price, it's been very high in valuation, but I have to say, the more I look into the company, I am impressed. I did a video the other day where I was kind of criticizing this company, and I more so was criticizing one of its main competitors, which is Cloudflare. And I hate to be honest, but the more I looked into the company, the more interested I am. I don't think I'll be buying this company today, not at this price, but it does interest me. So we're going to talk about the company, which is Crowdstrike, ticker symbol CRWD. Crowdstrike has been in a very tough position where it's held up better than many of its competitors in the market, but it is still kind of started to go down, but it hasn't really hit that big downturn like many others. It hit its all-time high of right about $300, and today it trades at $193, which that's about a 30-40% downturn from the highs, but considering that it's in a high growth category and we're in a low growth market where recessions are coming up and people are fearful and people are scared of what's coming, it's very interesting that this company has not went down more. So we're going to talk about the earnings report that this company just came out with, talk about the guidance difference that they came out with, look at some of the big bullish slides that they just released, and lots of other stuff. Lots of stuff, guys. So if you're interested in cybersecurity, if you're interested in cybersecurity stocks, cybersecurity investments, more specifically interested in CrowdStrike, CRWD stock, this is the one for you. This is some of the basic bare bones bullet points that I want to talk about and why I think that this is honestly, whether you like the stock or not, I think we can all agree that this is a fantastic company. Whether you like the stock or not, the company is great. If you haven't checked me out before, my name is Jordan. I'm a millennial investor, and I have my little portfolio tracker here that I disclose on the channel that I update every single month, which we will be getting an update to this very, very soon. The first of the month for July, I'm stuck in the past, y'all. September is the month we're looking for. When September comes up, we will be updating this chart, hopefully in the high 30s or low 40,000 range is where we'll be at. And this is my portfolios that I have in my growth and dividend growth portfolio, which is shared below down in the description, as well as lots of other money-making opportunities for referral stuff, including referrals in one finance that 124 people have signed up for so far. So check out all that stuff down below. Thank you so much for watching, and let's go ahead and dive into the new guidance that this company just released. Now, if you didn't know already, let's look at the quarterly number that they just came out with. They came out with $535 million. Now, they're projecting to continue this growth. Next quarter, they're projecting out in fiscal year 2023, quarter 3, to about $570 million. So steady growth compared to this quarter's $535. That's about another $35-ish million in additional growth quarter over quarter. Not year over year, quarter over quarter. That's in 90 days. So that's significant growth, especially for a company that is growing so fast. This continues to just shock investors as they grow this subscription revenue at ridiculous pace. Now, furthermore, I want to talk about the guidance. What you're seeing right now, this page is what they came out with last quarter. This was their guidance right at about $2.2 billion. Now, this guidance is a little bit higher, coming in at about 2.22 with an extra 2 on it. Slightly higher growth. And the profitability the same as well. If you look at their non-GAAP income, it increased quarter over quarter from about 306 to about 321. And you see the net income, same thing, increased a little bit from 283 on the low side to 313 on the low side. And then same thing across the board. You see all these numbers coming in better. They're raising their guidance on top line and bottom line estimates, which is really good to see. So not only is this company had a long track record of growing that revenue and growing that profitability and free cash flow, but according to the company's internal estimates, as well as matching analysts, this company is expected to continue growing in a big way in the future. Now, the main thing I want to talk about with this company is the opportunity and the reason why this could be an awesome investment. Now, the price is high, but the business is fantastic. There's a reason why it's priced so high. Now, look at this little bullet points here. Look at some of the main slides. I just want you to take a glance, pause the video if you need to look over this, okay? Next, I want to talk about the customers. This is the main thing I wanted to talk about on this slide, okay? Right here it says, of the Fortune 500, 258. And of the top 20 banks, they have 15 of their security systems. Of the top 20, you can see that they have some of the biggest customers on the planet. And what's important is, if we go back to, say, 2018, okay? This company had about 1,000 clients, which is literally 10% of the size it is today, which is just insane. That's crazy talk. But of that 1,000 clients, let's say if they had something happen and they lost 100 or they lost 200 of those clients, that's bad. That's not good. Maybe we go into a recession. Maybe some of these clients have to cancel, which so far they haven't been. But the amount of clients they have now, If some industry, like say, I don't know, maybe if they have a retail, if they do a lot of retail companies and retail takes a big hit, that's okay because now they have 20,000 different clients diversified among all different categories. So the opportunity for them to lose that penetration into the market is not as risky as it used to be. Now, speaking of the market, I want to talk about the growing opportunity for this business. It's just ridiculous. The market, the TAM, the total addressable market was $25 billion at IPO in 2019. This year in 2022, it has over doubled to $58 billion. 2 years later, it's projected to be $71 billion. And then by 2025, it is projected to be as high, this is potential, this is going to be as high at $126 billion. That is just crazy opportunity for Crowdstrike. Now we could sit here and discuss how fast cyber solutions and security for cyber is going to grow, and we could sit here and discuss maybe it's going to grow 5%, maybe it's 10%, 15, whatever. The numbers is irrelevant. What I want to focus on here is that according to past numbers and future projections, I don't think there's anybody that disagrees that says, nope, cybersecurity is not growing. That's not going to be a thing in the future. I think everyone agrees that that's going to be a growing market, and the TAM, the total addressable market for any cybersecurity company, including CrowdStrike, is going to continue to grow. So that's a good thing for a company like this. Now, lastly, I want to talk about retention rates. Very important for a company that is focused on subscription revenue. Now you see this red line. Now the blue line down below, gross retention, that's good. That's really good. The amount of customers that are staying, you can see it's increasing over time. Right now, about 98.1% of their customers stay subscribed to their services. But if you look more importantly at the red line, this is what's so key. What the red line is net retention. Now, what you might be saying, how can they keep more than 100% of their customers? That's not really what it's saying here. They're keeping almost 100% of the customers, 98% to be exact. But I Googled, in case you didn't know, what does it mean when net retention rate is over 100? When net retention rate is over 100%, it indicates that the revenue gained from upsells, cross-sells, add-ons are larger than the revenue lost due to downgrades and churn. But business size is a factor when you're looking at good NRR. The benchmark for a good NRR differs for small, medium, and enterprise businesses. What it says right here in that first key sentences is that basically when they're upselling, cross-selling, and doing add-ons, they're gaining revenue faster from their old clients than they're losing revenue from people that leave. So these 1, 2, 3% of clients that leave every year is losing less revenue than the amount of people that saying, hey, we used to spend $100, now we want to spend $150 for your services. Hey, we used to spend $1 million, now we want to spend $2 million for your services. So this company is growing both internally and externally. And what's so interesting about this is that if you look at some of their expenses, right here, if you look at sales and marketing, this is what I want to focus on. The sales and marketing has continued to increase, as with any growing company you would expect, right? But I want to give an example of a company like Microsoft. Microsoft was a company that had to spend a fortune on sales and marketing for basically decades while they growed out their businesses, and they try to limit this over time. It still increases, but it doesn't grow nearly as fast as it used to, especially when you compare to their revenue chart, much more vertical. So while they used to spend a lot more on sales and marketing, now they don't really have to so much because this company is starting to get so profitable, talking about Microsoft, that they can just focus on reinvesting back into the business. Now, I think that eventually CrowdStrike will get to a similar level, where this massive growing sales and marketing will start to grow at a slower pace than their revenue, which of course, what does that do to the profitability when you raise the revenue and lower the expenses? Well, that makes the profits, i.e. the free cash flow, go through the roof. And we're already starting to see this where this company has went from a free cash flow negative company to now going to a free cash flow positive company, including this quarter's record number of $157 million for the quarter out of its $500+ million revenue. So that is not bad when you consider that they have about $535 million in revenue, and of that 535, 157 hit free cash flow. Let's do that math. 157 divided by 535. About 29% of the free cash flow is getting to the bottom. Or excuse me, I just said that backwards. 30% of the revenue is hitting free cash flow as of this most recent quarter. That is incredible. That actually beats out my main investment, CrowdStrike, CRM Salesforce, which is actually only doing around 20%. So that's very, very, very good news. But overall, guys, thank you so much for watching. I hope this gave you a little insight and a little couple bullet points into Salesforce. I keep on saying Salesforce, CrowdStrike, into CrowdStrike. Hopefully you guys enjoyed this video. Check out all the stuff down below in the description, and I'll catch you guys next time.